Hi everyone. Today is March 9th, a Wednesday. I'm Marv Eisen of Timeless Dollar. And as a student of the S&P Emini market, I have a 20-year history that goes back to the days where I took trades without any rhyme nor reason, hoping that I'd make money, thinking that it looked easy. When I look at a chart, a previous chart looked easy, so I figured I could make money. And I went out to California. I live in New York. I went out to California. I registered for a 3-day seminar, and supposedly, and there were people there from all over the country, and they talked about flag patterns and pennants and things like that, and they made it sound like all you have to do is look at this flag, and if it's going to go this way, you do this. If it goes that way, you do that. And like most of the students there, and I kept in touch with them for a year or so after the seminar, most of the students didn't have great success. Over the course of time, I learned that the market doesn't trade in completely haphazard fashion. The market does have a pattern, the market does have a rhyme or reason, or rhythm rather, and the market does have targets. Now, I study the market, I measure the market, and I go back to the days where George Taylor studied the grain markets and developed a system based on market movements that he observed of where the market is likely to trade on the following trading day. His numbers and his methods have relevance today, and I've proven it over and over. Now, in the 1950s, when George Taylor developed his program, there were no computers, so you can't blame computers on the fact that you're losing money in the markets. The markets, in fact, are moving today pretty much exactly as they did back in the 1950s in George Taylor's time. So, to the extent that George Taylor's measurements and studies were effective then, they are just as effective now in trading the market. If you've read the Taylor book method, I want to reference a central point of his studies, and that is the market has a 3-day cycle. The market moves in a 3-day cycle. A buy day, a sell day, and a sell short day. Now, these days are not actually days, they could be periods. But a buy period, a sell period, and a sell short period. You can see these patterns in the big picture and trade them or know their patterns that are developing to give you a hint of where tomorrow's trading is going to be. And for instance, yesterday, and we're in the height of this Russian war, today is March 9th. Yesterday, I observed the S&P candle. This is the 1-day chart of the S&P right here. And I observed the candle on March 8th. And you see this candle? And I wrote to the subscribers in my Trading Zone report, if you've taken my course, you'll see that today's candle is the classic sell short day. If the pattern follows, it may indicate a green candle to begin the next cycle. Now, I sent this report out last night to my subscribers together with today's Trading Zone. And the Trading Zone numbers for today are right here that I sent out last night after the market closed. So where are we today on March 9th, where I said, if the pattern follows, it may indicate a green candle to begin the next cycle. So let's look at today's S&P. And here we are. This is March 9th, and here we are, March 9th at, let's see, it's 10:18 Eastern Time, and we have a green candle. Is this a mystery? To me, it's not a mystery. Was it likely? Yes, it was likely. Of course, we have a war going on, but nevertheless, this red candle here with the long shadow to the top, this is a classic sell short day pattern. So we have a buy day the following day. The market opened up, gap up, and today we're about an hour into the trading day. We are in the green. Will we end in the green? Don't know. We'll have to see. But so far, Taylor's method is holding out. In fact, going back to this candle right here on February 24th, this is beginning of the previous cycle. The market goes up, and then the market is driven down to go up again. And this is a classic Taylor cycle. And I'm a student of the market, beginning with George Taylor's numbers. And it took me years to do this. For those of you who are watching this video, and if you're trading and you're not having success, perhaps you should see the video I made the other day, which is centered around basics. You've got to know basics. You've got to know the market basics. And what it comes down to is when you take a trade, you have to know why you're taking a trade, because you have to know what to look for to anticipate where the market might go, because that's the only way you're going to make money in the long term. Now, after you learn the basics, you have to know what to look for in the market, because these patterns, just as the Taylor book method pattern repeats itself, there are trade patterns that repeat themselves. And there are only 4 trades that you need to know, or that you should know if you're going to be a successful E-mini trader. And that is the gap trade, the trend trade, the time and price trade, and the support and resistance trade. Those are the 4 trades. There are only 4 trades you need to know. And if you know these trades, and you know the basics, and you know what to look for, your entries will most likely lead to successful trades. So learning those 4 trades and knowing the trading zone is the most important thing that you should know in becoming a successful trader. And I teach these in my course. I know some trading courses that sell for $5,000 and more that offer hundreds of hours of training. You don't need hundreds of hours of training. You need to know the basics. There aren't a lot of them. You need to know the rules, and you need to know the 4 trades, what to look for, and then trade them. That's it. That's it. And if you do that, you'll be a successful trader. I'll tell you what these trades are in a little more detail in my free course. Take my free course at timelessdollar.com. Go to my site, timelessdollar.com. You'll see under courses, look at the free course. Enroll in the free course. I go into, with a little more detail, what these 4 trades are. And I also tell you what the mistakes are and how to avoid them, these mistakes that most new traders make. So that's it. That's my video for today, Wednesday, March 9th. Thanks for watching. Trade safely, use a lot of patience, and I'll see you in my next video. And hopefully, as a student in my course.